And good morning and welcome to the VSA Capital 5 Minute Morning Miner on Monday the 26th of January. Good morning, Paul.
Good morning to you. Good morning. Boy, that those precious metals prices are sure roaring ahead.
Yeah, it's pretty lively Monday morning. We've got gold. Actually, it was over 5,100. It's now just back to 5,092. Silver, which over the weekend was doing some really crazy stuff. It's trading at 109.6. We've got tungsten APT trading at over $1,300. So uranium's up at 88.6. Commodity prices still going to the moon. I'm not saying they're all going to keep going up in a straight line, but this is still the start of a 2 to 3 year bull market in commodities, and equities have still actually got quite a lot of catching up to do. As Robert Friedman would say, this is the revenge of the miners. Right, let's do news quickly today. Let's start off one actually we were talking about the other day, which is Thor Exploration, run by Segan. It's a gold producer in Nigeria. He's done extremely well. Paul, what's their news?
Yes, their news is a pre-feasibility study released and a new MRE for the Douta gold project in Senegal. This is intended to be Thor's second operating mine to follow on the current operating mine in Nigeria. This new mineral resource estimate contains just over 50 million tons in indicated category at 1 gram gold per ton for 1.7 million ounces at a $4,000 cutoff, and another inferred resource of 9.3 million tons at zero point 0.9 grams gold at the same gold price. Probable reserve for the PFS 36.6 million tons at just over a gram, and that's calculated for the reserves status at $3,000 per ounce. So that encompasses the old mine tailings as well as the current Makosa uh, pit area, and initial results from the discovered Baraka 3 prospects, all of which remain open on strike. We're looking at a post-tax IRR of 61% on a gold price assumption of $3,500 US an ounce. So looking very robust, of course, in these current gold prices. And long life production profile expected over at least 13 years in order to produce this reserve. So, given how robust it is and how strong the gold price is, I would expect the company to move faster rather than slower in order to actually put the mine into construction development.
Yeah, I think you can work on a slightly higher gold price than that. But anyway, there you go. Right, so Pan African Resources, Paul, they've got news out today.
Yes, they do. This is their half year production update for their operations there in South Africa. Gold production was up by 51% to 128,300 ounces, and further production increases are expected here in the second half of 26 in order to meet full year guidance. They have declared an initial dividend of 12 cents rand per ton, 12 cents rand per share. And they do have a definitive feasibility study on the Soweto cluster project expected to be completed by June or the summertime this year. Lost time injury frequency also improved quite a bit, so it's awfully nice to see it that it's safer operations too. Breakdown on gold production showed that only the Mogali Tailings Production Center did not meet its expectation on higher gold output at this stage. And that part of that is due to the mine sequencing of where that mineralization is being currently extracted from those tails. All-in sustaining costs are higher by roughly $300 an ounce, and that's been to at least $1,825 US an ounce, and that's being driven by higher gold prices calling for higher royalties to be paid, higher share-based compensation payments according to that improved output, as well as the gold price. And then because it's a natural resources country with these rocketing commodity prices, the exchange rate on the rand has improved against the US dollar, on which the costs are estimated.
Okay, let's stay on gold. We've had Q2s out of Orosur today.
Yes, we had Q2s from Orosur, the Columbia gold explorer. Significant progress on the Pepist target that they've been drilling off there. The intent, they realize it's a high grade, sort of a nice size pod that they would like to advance on its development program. Or toward a development program here. They also had news out on their Argentina activities, which had some drilling done on them, but they also have decided to fully impair their Nigerian lithium initiative, as they don't want to spread themselves too thin at this point on their financing commitments.
Okay, and then just as a little bit of a change away from gold, let's head south down into Namibia. Actually, we tend to think of it as tin, but Andrada mining, actually, it's lithium update we've got, isn't it?
Yes, it is. This is on the Lithium Ridge partnership they have with SQM, and this is based on stage one drilling program showing as well as grab sampling out there. To validate what should be a very extensive drilling program, because the lithium grades on spodumene out there are coming in quite high for a spodumene deposit, exceeding 4% Li2O in places. And the scale of the mineralization is showing that they should concentrate on it with their drilling program, as well as showing some really sweet zones of tin and tantalum found in individual samples. So I think these were all suspected fairly strongly when SQM first came into the project, so nothing really surprising here at this point, but it's the drilling which will tell the tale as to just what kind of scale we can expect here.
Actually, I'll tell you what, but we'll go east slightly across the other side of Africa to Harena rare earths, which is in Madagascar. They've had some highlights of their pre-feasibility study. Madagascar's interesting. I've spent quite a lot of time looking at Madagascar, mainly on the oil side, the heavy oil that they've got. But I've been to country, and has some amazing resources. So just comment on Harena rare earths, Paul.
Yes, Harena Rare Earths. This is a PFS on their Ampasandava ionic clay rare earth project in Madagascar. Total rare earth oxides of 71,000 tons to be produced over a measured 20-year life of mine in the PFS. And annual TRO production estimated at 4,000 tons a year, on a pre-production capital cost estimate of $142 million. The ratio of total REOs to the rarer magnet REOs is at 41%, showing pre-tax NPV 10 of 616 million and a post-tax IRR of 27%, with a payback period over 5 years. 20-year life of mine in this particular PFS estimate. So relatively small scale, but definitely makes sense at these numbers in order to pursue it toward a full DFS at this stage.
Yeah, it's actually based up in the north of the country in Nosy Bay. Beautiful area, very scenic. Quite difficult to put infrastructure in for it, I think. But maybe one will have a closer look in the future. That'll do for now, Paul. Thank you very much. And hold tight for the rest of this week. It could be pretty exciting, and we'll be back tomorrow.
Very good. See you then.
This podcast has been produced and edited by VSA Capital. It is intended for information purposes and not as investment advice. The The information is intended for recipients who understand the risks associated with equity investments in smaller companies. Please do your own research and do not rely on a single source when making an investment decision. VSA Capital may derive fees from this content and seeks to do business with the companies mentioned.